Hey, my name's Jack Nicholson and welcome to my YouTube channel. In this video, I want to talk about two of the big six lenders that have cut rates today. This is a great move and we're going to probably see a little bit more competition in the mortgage market for a few reasons. One, the Bank of England cut rates last week. That gives lenders a little bit of wiggle room. The swap rate, which they actually borrow at, has been going down over the last few weeks. And thirdly, the market is quieter at the moment. So they are looking to get the market moving again and get your business. So in this video, I'm going to talk about who these lenders are, what their new rates are, and much, much more. If you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers now. And let's get some more views on this video. How do we do that? Simple. Smash like, tickle like, do something to that like button. That really helps me with the YouTube algorithm and helps the channel grow. So thanks to everyone that does that. So last week, the Bank of England cut rates, which was widely expected. The markets had predicted it for at least a couple of weeks prior to the meeting, and they were correct. And we got a 1/4 percentage point cut, which was good. Now, the market, as I said, is quieter at the moment. Rightmove is saying that. Estate agents are saying that. RICS, the chartered surveyors, are also saying that. And so lenders need to stimulate the market. Now, the rate that they borrow at has also been dropping over the last few weeks, and that's called the SONIA swap rate. And that's based off predictions on where we think the Bank of England are going to go. Now, the expectation is that we'll get 3 more cuts in 2025. In fact, Barclays are really confident that we'll have 3 more cuts by September, and there are only 3 meetings by that time. So it'll be interesting to see where we end up. But rates are moving down, and that is positive news for anyone that wants to remortgage, buy a property, or just really wants the market to become a little bit more affordable on a monthly basis. So who are we talking about today and who's cutting their rates? Well, first off is Santander. And I think a lot of you on here borrow from Santander, or at least you've got a bank account with Santander. Because when I do rate updates, always in the comments, one of the most requested lenders to have a look at is Santander. So let me know if you're with Santander in the comments. I'd like to know if maybe higher proportion of you guys that watch could be with Santander. It just seems that way, at least to me anyway. So Santander are cutting rates. They're going sub 4% on a number of products, which is good. They've got a good 2-year deal here, which I think you can go and have a look at to get you started. The rate drops to 3.94%. The fees are under £1,000. And the loan to value is 60% loan to value. Now, that covers a huge chunk of the mortgage market, because that is anyone that has had a property for a while. So if you bought your property a long time ago, the chances are that you've got 40% equity in there. It's not going to help really anyone that is a first-time buyer. But a lot of lenders now do have first-time buyer rates of around 4.9%. So you can go and see what those look like and see if those stack up and work out for you guys if you're a first-time buyer, or if you know anyone that's a first-time buyer as well. So look, it's good to see all of the major lenders now are below 4%. Next is Barclays. They cut a couple of weeks ago as well. And so they are the ones that are saying their belief is that the market is going to see an additional 3 cuts by September. That's not long. And that really could move the market. So that would bring us really to a very, very affordable rate. And that could impact greatly buy-to-let investors, residential mortgages, commercial mortgages, loans, all sorts of things could benefit from that. A lot of that is going to be down to how well the economy performs. There's a risk of inflation rising. That's a fear at the moment that the Bank of England is keeping an eye on. But also they're keeping an eye on the unemployment figures, because The economy isn't particularly strong. It's on a knife edge. You've got the tariff war that, while it seems there's a pause with America and China, they're still at 30%, the tariffs, even with a pause. So they've reduced it for 90 days. But 30% is going to cause some sort of inflation in the USA, and that could move all around the world. So we've got to keep an eye on what happens there. So Barclays are saying they feel rates are going to come down faster, and they are cutting their rates fairly frequently at the moment. So they are doing 2-year deals and 5-year deals they're cutting. And on a 2-year deal, they've got a rate at 3.79%, which is good. Fees have come down a little bit on this one. So they're £899. I know some of you are really looking for a deal with low fees. It's getting there. It's not going to be cashbacks or anything like it used to be for a while, but they are coming down somewhat. This isn't one of the ones. We did a video the other day where it had 7% fees, or another one with the mortgage work that had a 3% fee. So look, these are good, especially on bigger mortgages. They work quite well. This one is also 60% loan to value. So what does that show us? Because a lot of people are putting really good deals at 60% loan to value. And what that shows us is that lenders are trying to get the best borrowers. They're trying to get the safest deals, as much as they can of that onto their books, just to give them that predictability and that safeguard, just in case house prices do go down. This week, in the last 7 days, we've had 2 contradictions in house prices. We've had Nationwide saying house prices are down. I think it was 0.6%. We've had Halifax saying house prices are up. And that's, both can be true. That's their data that each of those sources are looking at. So lenders at the moment, they're trying to get the best deals to the safest bets and the people that are unlikely to go into negative equity. Now, what do we expect going forward? Well, I think this week you're going to start to see some more discounts from lenders. I think you're going to have not some big drops. I think you're going to start getting people just slightly undercutting each other. The fact that Barclays has got one of the best rates on the market now means Nationwide are likely to move forward. Virgin Money, who is also a Nationwide brand, are often competitive as well. And I think you'll just start to see things edge down, especially as we get closer to that June meeting. Right now, it's a little uncertain. Are we definitely going to get another interest rate cut in June? We could easily. Now, as we get closer to that date, the markets will start betting on that. And if it gets high, like the 100% probability that we saw this month, I think you'll see some more cuts in a couple of weeks from now. Let me know if there's some other lenders that we could be checking out. I did a video yesterday morning that was a rate of 2.79%. Do go and check out that video. It's a cracking deal in my opinion, and I think that could be a good option for a number of people that watch this channel. Do check out as well all the other content on the channel, including this video right here.